Because I think that's one concern a lot of clients have is, well, if I have technically two homes at once, even for a very short period till I sell, I'm not going to qualify for what I want. And that's a big beauty of this program.
All right. It is me, Ashley, with Keller Williams Real Estate in Everett, and I am really excited about this video. I have Bburns of Directors Mortgage with me, and we're going to be talking about transition loans. Welcome, Brett.
Hey, thanks so much. I'm excited to be here. And, transition loan, one of my favorite programs. So it'd be great to kind of chat through some of the details and specifics today with you.
Yeah, I'm excited. It's a very special loan, and I'm happy to have you here to talk about it. So let's kind of talk about who is this loan right for? If you were thinking about who wants to do a transition loan?
Absolutely. Yeah. So really a transition loan is a client that owns a home now and wants to buy a new one, and within that, there's always, okay, hey, I want to buy a new home, but can I buy my new one first? Do I have to sell my old one before? What's that piece? So it's really, as goofy as it sounds, just transitioning from one home to the next. So it's kind of helping someone through that phase for us.
Yeah, I love that. And it is a thing that comes up a lot, especially, since we had everybody has a lot of equity, and then they're like, okay, I want to move on to something else. How do I make that happen? And sometimes on the real estate side, it's really complex, to get a contract accepted, contingent, for example.
Yep.
But this product solves that.
Absolutely. I mean, the two biggest pieces for us is, hey, I guess maybe three, how do we make it more convenient for a client, right? Then how do we help to avoid things like a contingency and make it more competitive for the client? And then, just putting them in a much better position overall with the sale of their current home. So those are kind of those three components we want to help them with to improve the process from the buy and sell side.
Yeah, exactly. Okay. So let's get into the mechanics of it. So we kind of understand the problem. You have your house here and you want to buy this new one, and you want to basically take that equity and put it into that next home. All right. So how do we do that without being contingent and without, I guess, using a traditional bridge loan?
For sure, yeah. So essentially how it works for you is there's kind of two pieces of that transition loan that come together. So one component is saying, okay, based on how much my current home is worth and how much I owe on my current home, how much equity is in there. So then we'll help take a portion of that equity to use as the down payment on the new house.
I see.
And then the second component of the bridge loan is, okay, the financing for the new house. So we're saying, okay, now this is where it's very different than a bridge loan is. Hey, we're not just taking the equity from your current one, we're also helping to lend on the new one. And that's where we can qualify just based on the new home. Because I think that's one concern a lot of clients have is, well, if I have technically two homes at once, even for a very short period till I sell, I'm not going to qualify for what I want. And that's a big beauty of this program is, hey, we're going to be able to qualify just on the new one because the intent is to sell the current one.
Yeah. And I think that is a super duper important point to highlight, is that you don't have to be able to qualify debt to income ratio wise for both mortgages.
Absolutely. I mean, really the ultimate vision is, hey, if I were to sell first, and just have a position of, okay, I got my equity cash in hand and I'm qualifying for just a new house. How do I do that before I sell? And that's the vision with the transition loan, giving you that same qualifying capacity just before you sell.
That's perfect. Okay. And then the other piece of it is that you basically, when we present the offer, it's presented basically as a cash offer.
Absolutely. And that's the cool part. So with these transition loans, they're funded through our portfolio department. And the beauty of that is they can move very, very fast because unlike a normal loan, that's very heavily based on, appraisals, title, the debt to income ratio. And there's components, of course, we put together. It's much more equity based to say, hey, this is based on the equity of the current home and the new one for us to be able to fund it that way. So that's been a key piece. I mean, we've had many of these that we can close in, 10 days to 15 days if needed, but that can be a great competitive advantage for our clients.
Yeah, that's really sweet. So I think that's that segues us right into this, a huge pro, not having to offer contingent, because those are almost impossible to get accepted.
For sure.
And the other thing that was really cool that I learned is that, the homeowner can stay in their current home, right? Until they close, the transition, the actual moving, the mechanical part of moving to the next house is easier.
Yeah. And that was our vision. I mean, one is just the ease for a client, right? So, hey, it's a lot already buying a new house and selling. Those are two big things to do. And trying to do them at the exact same time and align them perfectly is very, very hard. So, but the other component is, okay, if I can buy, to your point, non-contingent and aggressive, I can normally buy at a better price.
Correct.
Then, if I can move at my convenience, stage the house, do maybe a few repairs, and sell, not in a rush because of the contingency, I can sell at a better price. So I'm taking advantage of both the better purchase price, the better sales price, and that can be also a huge financial gain on top of just the convenience factor.
Yeah, yeah. I mean, I think that's really excellent because doing the staging, doing those repairs, I mean, it just shows the home a lot better, and people typically they just do better. Okay.
Absolutely.
So what other pros can you think of? I mean, I think that maybe rounds the list out.
I think that's the biggest ones. I mean, honestly, the convenience side, ability to win as the market's more competitive, and then again, better pricing for my new house I'm buying, and better sales price for my old house. I would say those are the biggest pieces that are the true pros and why clients are excited about this program.
Well, why would people maybe not be so excited, or maybe why would this be the wrong option? I don't know.
Sure. Yeah. I mean, so I think a couple things for us would be is if we're in a position where one, potentially a client has very low equity, that's going to be a little bit trickier. Now we're going to help any client evaluate their options, but some of the bridge loans and transition programs may not work quite the same if we have a small equity position.
Right.
The other component could be is, cost. If we are doing a transition loan, it's a transition into a permanent loan. So there is a little bit of extra cost. Now, realistically for me, I do believe that when we pencil the numbers and say, hey, that extra transition loan cost is more than covered by the savings on the new house and the extra sales price on the old house. But technically there's extra cost. Again, it's all going to be weighed out. And I think the third component would be comfort level. Now, in our marketplace, typically we can see things move pretty fast, especially in a competitive market. But technically, there would be a small window where you own two homes. And for some folks, that may make them nervous. So again, I want a client to always feel comfortable, and most folks do. We always look at having good reserves to cover potentially the two homes for a very short period. But those would be some things that I would definitely want the clients, to be able to think through and us to have discussions on, just to make sure it really is the perfect fit.
Yeah. Okay. Yeah, I think that those are the ones that kind of come into my mind. So for the convenience of this loan, it's going to cost you a little extra.
Yep.
No problem. You'll own two houses at one time for a short period of time.
Yep.
I mean, but if the thing is if you're going to sell it, then, shouldn't be any problem.
Absolutely. I mean, that's where we've done, tons of these. I bet you we've done 100 of these in the llast couple of years for clients, and it's just been huge to help in the marketplace. But again, a huge goal is always to make sure it's the right fit for the right client. So those could be, an easy way we can help vet that out for each client.
Yeah, that's perfect, Brett. Okay. All right. And so I think the only thing, the question I had about this is so if a client were kind of weighing out, do I do a traditional bridge loan or do I do a transition loan, right? Since they're different roads, why wouldn't they just do a bridge loan?
Sure.
How does it look different? When you work with the real estate agent and you write the offer, does it look the same?
Great question. So I'd say there's two reasons exactly. One would be qualifying. So on a traditional bridge loan, you're qualifying for your current mortgage, the bridge loan, and the new house. Now, some clients definitely qualify fine, but other clients that would limit their ability to buy the house they want. Where the transition loan is going to, as we had spoke earlier, is going to qualify just on the new home. Okay. So the qualifying power would be different. Okay. And then secondly, as you asked about, how would you write the offer? So with the traditional bridge loan, we're getting equity out of the current house, but doing a normal loan on the new house. Now, it's still good because it's non-contingent, but it's a traditional mortgage, maybe a 3 to 4 week closing, regular contingencies. Or with the transition loan, we have the ability to kind of make more of that cash style offer to say, okay,
you do a 14-day.
Exactly. If we want to be non-contingent, super quick close, no contingencies, it can just be a little bit more powerful offer. So I think, as I would evaluate with a client, how does our qualifying look? And then depending on the home of interest, how competitive may that be and which way we need to go and decide between those two products.
Yeah. So how do they rank against each other, cost wise? Like, are they
Yeah,
about?
so the biggest difference is, so in either case, we're doing a portion on the current residence to pull that equity out. So
Sure.
that component of a transition and bridge is the same. The difference is on a transition, we have the transition loan on the new house, then we redo it to a permanent loan once you sell.
Mhm.
For a bridge loan, you're immediately just going into your permanent loan. So that's the difference, is you have one extra loan on the new property. So that would be where there's a little bit of extra cost on that new property for that second or temporary loan as transition, then you rolled in the permanent. So I would say typically that would be between 1.5% to 2% cost of the loan amount on the new house. And that's the true difference between the two.
I see. I see. So if you did qualify for the 3 different mortgages, so
Mhm.
current house, the bridge, and the new house,
Yeah.
you might just do a bridge loan.
Absolutely. And I've done a lot of those for
Right.
clients. There's been a lot of scenarios where we can still make a great offer, right? We can come in and close in 3 weeks. We can still waive contingencies if need be. So that's still a very viable option. So, anytime a client's in this position of, hey, I own a home, I want to buy a new home, what's the proper, way to transition through it? I would evaluate, technically a contingent offer is always an option, but realistically in today's market, we would look at, hey, the bridge loan option versus the transition loan, and they get both numbers. It just comes down to, again, they're going to be 2 different qualifying numbers and which one fits the budget they want.
Yeah, totally get it. Okay, cool. Well, I mean, we've been talking for a little bit. Do you have time to maybe give like a quick example and sort of like explain like a little bit like sort of the steps, like step 1, do this.
Sure. Yeah. So, recently, we just helped a client with this. And in their vision, so what they want to do is a little bit unique to where they have a home currently free and clear. So great equity position, right? And they do want to buy a new home. And I think the ultimate goal would be, again, to not have a mortgage. But it's saying, hey, if in order to make a competitive offer, it's hard to make a contingent offer. And then secondly, I don't want to be in a position where I sell my house today and have to go find interim living. Now, these particular folks found their new house, and it's like, well, I definitely don't want to wait to sell mine because I might lose this perfect new house.
Right.
So this was the perfect scenario to say, okay, let's use the transition loan, take advantage of tons of equity in that current home since it's free and clear, be able to make a nice, clean, aggressive offer on the new house, which they won. And now what's cool for these guys is in this case, the non-contingent offer by itself was enough to win. So it didn't have to be a 14-day close. I think this one was about 45 days. Right. So the beauty is they captured it, they won it with non-contingent, but now they have time to start prepping their house in the meantime to get it listed. Yeah. So they'll be able to get their house prepped, move into the new one, immediately list their current house. And in this case, they'll just pay off that temporary loan and never need a perm loan, which is kind of cool. But that's been a great option. So mechanics wise, we just essentially evaluated the equity in their current home and then helped to put that together with the bridge combo on top of the transition loan. And then that would 100% fund the new house. So as goofy as it sounds, they were able to make a nice, clean, aggressive offer with 0 down payment out of pocket, right? Because it's all coming from their equity. And that's the beauty. Some clients would joke is I'm making almost a cash equivalent offer with the 14-day close if I need to. And it's no out-of-pocket money because I'm leveraging my equity.
Well, yeah. Well, and you know what's so sweet about it? Like now that you sort of say that, it's basically like buying a house with a house. Like the cash, it never really got like, it will get transferred into like a cash equivalent at some point, but more or less, it's like.
Yeah, that's a great way because you're right. Most of us would naturally think, okay, to buy a house, I need this cash in my bank.
Correct.
And to your point, you're saying, hey, to buy this house, I'm using my current house. I love that analogy. That's a perfect way to say it.
Yeah, that's really sweet. Okay. Well, I'm excited. I think this is great. Do you have anything else to add?
I don't think too much specifically. We went through a lot of details, but I would just say like any loan program, every scenario is going to be a little bit different for a client. So, really, I'm of course available anytime to help chat through questions or scenarios, but that would be the next big step for any client intrigued is just, picking either of our brains on it or having us run some numbers and helping them out.
Yeah, sweet. Well, thank you so much for coming, Brett. I think that was so good. I'm excited. I hope that this helps somebody out there that wants to make this exact same transition happen. And we will have Brett's contact information and everything down below in the comments. And please like the video and subscribe to the channel. And we will see you again soon.
Awesome. Thank you.
Bye-bye.